Thank you to everyone. It's a pleasure to be here again at an event hosted by David and Lukáš. I'm very proud and happy to take it back from personal identity tokens to project or business tokens, the mundane business of financing. And I want to talk about some key success factors that we at SVS Capital Partners identified during some research that we did in regard to ICOs. Now, what qualifies us at SVS Capital Partners to look at that? SVS Capital Partners is a company made up by a good business partner and very good 30-year-old friend of mine, Ruben Bach, who has a lot of experience in venture capital, early seed, early stage financing, and myself. My background is primarily in capital markets. I have IPO'd a number of companies in Germany. We are working together since 2012, advising established companies and startup companies in regard to capital raisings, and we have had some exposure to crowdfundings. We have managed and prepared 2 of the 6 largest German crowdfundings. And if you take that experience, capital markets on the one hand, with all the regulation, compliance, legal stuff that comes with capital markets, and on the other hand, hands-on experience in the digital world of crowdfunding, digital investor targeting, social media strategy, etc., etc. If you take those 2 sets of experience, you have a lot of what you need in ICOs. Because ICOs, I like to refer to as crowdfunding 2.0. It takes crowdfunding on a global scale from a singular jurisdiction. And everything comes together in ICOs. That's what attracted our interest in ICOs late last year. And that's when we started to look at some companies to see whether there are common patterns at successful ICOs. We define successful ICOs as those ICOs that raised a lot of money. We did actually identify some patterns, and based upon those patterns, we currently advise our clients who we support and assist in preparing ICOs. But before we look at some of the key success factors, I would like to share this slide with you. I'm not going to read the slide to you. You can easily do it yourself. It basically picks up on a statement that Stepan made earlier on. This study, or these findings, result from a study that was performed in late 2017 and early 2018 by researchers of 2 universities, the University of Luxembourg in Europe and the University of New South Wales in Australia. They analyzed almost 500 ICOs, and they came up with these findings. Now, if you look at those findings with the view of someone who comes from the old world of financing, that's where I come from. I started in '88 in old school banking, financing, capital raising. You have to conclude it's devastating. It's all bogus. You shouldn't spend a single second on it. Interestingly, to pick up on the presentation by Stepan just before me, if we look at the bullet with the 48%, 48% of ICOs that were being analyzed did not mention the name of the initiators or gave any background information on them. That is astonishing. And they raised money. Likewise, that's the one I like best, based upon my experience and background in conventional financing. 3/4, 76% of ICOs did not issue any information on their financial plan. And they managed to raise substantial amounts of money. How can that be? There must be something to ICOs. 250 million were raised in 2016. Almost $6 billion were raised last year. Now, in the first half of 2018, already 13 billion were raised. There is something to ICOs that will assure that ICOs will stick with us. They are a new mechanism to raise capital for startup companies, for established companies. It will not go away. There are a number of advantages to both issuers and investors. And that's why we will stick, or we will have ICOs in the future. But we clearly see a development from hot air or baloney projects that were financed in 2016 and 2017 to more professionalized projects, professionally set up companies, simply using ICOs as a way to raise capital. Now let's have a look at the 12 key success factors that we identified by looking at approximately 50 ICOs in late 2017. I come from the old world. I start in the old world. The first key success factor is essential. You need to have a solid business model. Otherwise, you should not go out to the market and ask other people for their money. Now, what does that include or imply, a solid business model? It means, or it implies, you need to have a solution to a real problem. You need to have an addressable market. You should have a proof of concept. Even better, you should have some traction or paying customers for your business model before you go out to the market and ask other people for their money. I just said that the financing world, the conventional world, is stepping into crypto investments, and therefore we need to, or you as an issuer, need to consider those requirements. We see a development of venture capital, capital markets, ICOs, slightly moving together in regard to the requirements we have. Second key success factor is actually the most important success factor recently identified by a research study conducted by the Goethe University in Frankfurt. They analyzed, the results are not yet public. At a recent event, I saw the main researcher give a teaser or some first insights into their study. And they concluded from the analysis of 1,100 ICOs, and that is true, we all know that it was possible in 2016 and 2017 to sell hot air. All you needed was a really, really good story and marketing, community building. It is not easy to address the different kinds of investors you have. On the one hand, you have, those are the guys I mentioned with the first key success factor, the investors stepping in from the old world, high net worth individuals, family offices, hedge funds who want to go into crypto for two reasons. Crypto is a very liquid market. It's far easier for them to step out of an early stage investment than it is in conventional venture capital, where they're bound for 3 to 7 years. And secondly, that's very important, there's no correlation between crypto assets and all the other asset classes we know. Public equity, debt, private equity, real estate, currencies, etc. So all of these guys want to add some crypto to their portfolios because it's a good equity or return kicker. So that's one target group we want to address, but then there's all kinds of different target groups we need to address on their common channels they use. And an important target group we want to address are the crypto investors, the whales, the people who are really rich with crypto assets. They were in Bitcoin very early on. They have accumulated substantial wealth. They need to diversify their wealth, and they started diversifying their wealth 2016, 2017 by selling Bitcoin and exchanging it or investing it in various tokens. To them, it is very important, and thus it is a key success factor for ICOs, that the offer you make as an issuer, the solution, the token you offer, is within the spirit of the cyberpunk philosophy or ideology. Now, what does that mean? It all goes back to the mid-90s, to open source. Open source tried to crush, and they were successful, tried to crush the monopoly of Microsoft. There was only one operating system at that time, that was Microsoft. And then we had open source. So the cyberpunk ideology says basically we want to disrupt or challenge monopolies or oligopolies. We want to take out middlemen. We want to democratize certain things, etc., etc. So if you have that within your business scope and your offer, the likelihood that you're going to have a successful ICO increases. Code is law. I assume all of you have heard this phrase, code is law. Code is law basically speaks about protocol dominance. And protocol dominance means that the solution you offer is superior and not being owned by an individual to the current solutions you have. ICOs are actually a very good example for protocol dominance. The capital raising process is suddenly significantly more transparent than it was or is in the old world. Now, I have run 5 IPOs. I have been part of the book building. If you look at the book building or the sales process of tokens, you can track everything real time, basically on the blockchain. So protocol dominance is very important in that regard. It is extremely helpful, but not ultimately necessary that the solution you offer is closely in sync with the blockchain. But generally speaking, it does help. To give you an example, Everledger. Everledger is a blockchain application based upon the Hyperledger blockchain by IBM. Everledger tracks diamonds from cradle to grave, from the mine when they are being mined, to the various process steps, to the various supply chain steps, until they get into the Tiffany store and until they're being bought by you for your wife. Everything is very open, transparent on the blockchain. It is a very good mean to avoid blood diamonds, which is a severe problem in the industry of diamonds. The 6th key success factor we identified, and I want to draw your attention to, are the token themselves. They need to have an immediate use case for you as an investor or as a holder. Now, they might put you in the position to buy a service at Japan. They might offer you some immediate financial return. They might give you service to a network. So there needs to be an immediate use, profitable use for you. An example for that is a recent ICO of Iconic Lab. Iconic Lab is an accelerator or incubator for young startups who intend to do an ICO. They screen them, they support them, they prepare them for an ICO. Now, as an investor in Iconic Lab, you get preferred access to invest in the companies that have signed up or that are part of their incubator program. Crypto economics or network effects were already mentioned by Japan, and intrinsic value appreciation mechanism in the token or in the business offer is very important. I want to give you an example for that. It's one of the clients we are currently working for. It's a German established company. They've been in business for 25 years. They develop solar and wind projects primarily in Latin America and in Asia. They have built wind and solar farms with a value, capex value of $6 to $7 billion. They have 200 people on this planet working for them. They are an established company. They are not a startup, an established company. They want to build, they have identified some defaults in the business of project developers working together with utilities. They have discovered, or they have told us that it is impossible for people in Latin America, for example, for retail investors, small investors like all of us, to invest in solar plants, in wind farms, industrial scale wind farms and solar plants, which is very different to what we know in Poland and Germany. It is possible for us to invest in those kinds of assets. Now they want to build, or they will build, a platform which brings together project developers on the one hand, who are no longer dependent from the large utilities or on the large utilities, and retail investors on the other side of the platform, network effects will develop. The more developers are interested in putting their projects on the platform to be curated by the platform and then to be taken into the PPA auctions, etc., the more investors will be interested in investing into those projects in a later stage. The more investors come onto the platform, the more attractive it is for developers to move to that platform. So that is a good example of how you manage network effects. And in the solution we're going to offer, we're going to have a security token which is going to be issued to finance the platform, and we're going to offer an asset-backed coin to finance the development of the solar or wind farms later on. These coins will be issued in the amount of the equity necessary to finance the project, and the rest of the project financing will be obtained from regular banks. Now the coins are being backed by the power generation capacity of the plants, so they're going to be backed in kilowatt hours. Part of the strategy is to sell a part of the up and running plants once they've been 2 years in operation, because then you can generate very good prices. The inflow of the money to the platform will be used to finance more projects. And for these more projects, it is not necessary to issue coins. Now that results in a situation that the coins that have been issued prior will be backed by more kilowatt hours. So we have an intrinsic value appreciation mechanism built into this system. Superiority to fiat currencies. That is also something which is of importance to ICOs, or helps ICOs to be attractive and to be successful. Currently, there's an ICO out there called the Kamba Money ICO. They're building a platform, and they're issuing a coin, the Carbon Money ICO. They're issuing a coin, the Carbon, which is partly pegged to the dollar, backed by the dollar, the US dollar. And the technology they're using will facilitate a significant number of transactions in minimum time. That's one of the huge drawbacks we have in Bitcoins. The Bitcoin blockchain is extremely slow due to the structure of the blockchain. It's been around for almost 10 years. Technology has advanced, and we see many projects who have a focus on increasing efficiency, etc. Now, with the Carbon coin, you can basically do anything you can do with fiat currency, refunds, escrow, chargebacks, etc., etc. Significantly faster. There's going to be a significant value to countries where you have hyperinflation, Africa, Greece, etc., etc. Number 10. We need to use, or you should use, immutable smart contracts to define right from the start in a very transparent way how value is going to be distributed amongst the token holders. It needs to be extremely transparent. It needs to be put in code. Code is law, in such a way that it cannot be changed afterwards, and there will not be quarrels about, for example, the distribution of services or profits. That takes us to my last slide, and that takes us back to the old world. The final two key success factors which I want to mention here, they were true 30, 40, 50 years ago. They were certainly true 30 years ago when I started my professional career. They are likewise true in the current environment, and they will still be true 5, 10 years down the road. You need to have a very professional project and business management. ICO projects are extremely complex. You need to cover topics from capital market regulations to IT security, to social media strategy, to distribution of tokens, the regulations which go in hand with that. You have all the compliance and legal issues and tax pitfalls, etc., etc. It's an extremely complex project. It's more complex than the IPO projects I have run. So you need to make sure that you have a team to run that process, or alternatively, you should get someone on board who can support and assist you during that process. That's the service we, for example, offer. Last but not least, like in any other situation where you ask other people for their money to be invested in your business, you should have an experienced management team. That is very important. And if you have an experienced supervisory board or advisors who themselves have ideally invested in the business priorly, that sends out a very good signal to all the people you want to address. Unfortunately, I will not be able to be around for much longer. I will have to leave shortly before lunchtime. So if you want to grab me afterwards, please be quick. Respectively, you've got my contact details on this slide. Please feel free to get in touch with me. And what I just told you about the 12 key success factors will very soon be issued in a book that's going to be released in German, unfortunately not in Polish yet, possibly sometime down the road, called the ICO Investment Guide. We anticipate this book to be released sometime in August. Thank you very much.
Thank you for bringing this German type of order into this crypto chaos. How would you differentiate projects that need an ICO against projects that want to use an already existent cryptocurrency?
Projects that want to use an existing cryptocurrency. Now, I'm not quite sure whether I understand your question correctly. Projects that use an existing cryptocurrency are typically not out there to raise money, correct?
That's one point.
So you do an ICO. To me, an ICO is just another way, a new way, a modern way, a very beneficial way, in particular for entrepreneurs or teams, to raise money. It offers significant advantages compared to a regular venture capital deal or an IPO. You don't give up shares. You don't have anyone sitting at your table trying to tell you how to run your business for good reasons or bad reasons. You don't have to repay the money, depending on how you structure the token. You don't give up your entrepreneurial grades of freedom. There is no additional personal liability if you run a professional and serious ICO. So to an entrepreneur, if you do it in a solid, professional way, and if you have advisors with you, in particular lawyers and tax people and project managers, it is a great opportunity to raise money. And that is very important, that is a huge advantage of crowdfunding plus ICOs compared to the old world, old ways of raising capital. You have all this social media, this network building. You can actually build a community. You can ideally build a customer base with this financing event. So that's a huge advantage compared to others.
Thank you very much, Sven, once again.